All right, Bruce here, Targeted Wealth Creation. Good Saturday evening. All right, I've got one, well, I'll probably do another video later, um, maybe Sunday morning, but let me get this one out. This is the one of four that I had not done, and I think this is the up-and-comer, peoples. You're going to be very wowed by how well this fund does because the underlying is just so bullish going forward. Okay, let's jump into it. So 35.56, it closed down to 35.30, was down about 73/4%. So we were down 40%, right? So we were a little more than half down as much as they were. So that's what you like to see, right? So what happened? Basically, let me see if I have those. Yep, I have my sheet. Okay, so what did we do? In this case, there were no shares bought. Again, this fund is new. It's not going to be paying for June, so it doesn't have a big following. People look at the the implied volatility, the IV, they see 30%. Then some clown said to me in a chat group, well, why would I buy GDX or buy gold stocks? I mean, gold's at an all-time high, or very close. I was like, duh. What do you think that's going to do to earnings going forward with these miners? Where are they priced? Their price is if gold was $1,200, not $2,400. So there's going to be some massive surprises going forward in earnings. What drives stock value? Earnings, right? Why is Nvidia going through the roof? Earnings, right? Nobody has what they have in terms excuse me, of a product. So right now they have a lot of pricing flexibility. I think competition will come in there. And ultimately in the commodity boom bust cycle, which clearly precious minerals and miners fall into, eventually supply will catch up. 7, 8, 9 years, right? I mean, do you know what it's like to get licenses and borrow all the capital needed, especially when it's out of favor, to put a mine together, let alone continuously running it with labor and energy? Those are the two costs for running a mine, labor and energy. Okay, so let me get back to the basis here. I am going to show a few charts, so just FYI, if you just fast forward a few minutes or at the end, and I'll do the payment, but then I'm going to go into why GDX, why precious miners, why now, why for 5, 7 more years. And if you don't believe it after seeing what all I show you, then fine, don't invest. I mean, it's no skin off my back. I'm just trying to share. You know, I was able to take 300,000 in early 2000s after the dot-com bust, and I was working in high tech and made a lot of money during that run-up. And then all of a sudden our stock is one of the 4 horsemen of the internet with, Cisco and companies like that. We began to crash, right? And I'm like, well, what's going to go forward? And I sort of found the boom bust cycle of the commodity, started investing in gold and the miners, and was able to retire in 2009, mainly just on the back of taking that 300,000 and turning it into 2 million. So I know this sector, and I've been waiting for it. It's had some false starts. We had a good run up in 20. We've had a bull flag since 2020. We're now in some of the bigger miners approaching that 2020 top. A lot of them are well below that, and that's historically nowhere near. Okay, let me get forward on this. So what did we do? We did these 3 trades, right? We bought to close 2 of the existing weeklies, and then we put on a new one. So let's just get to that. So again, I always color code these, so if you guys are watching, I'm gonna go orange now, right? This is the money we made. We had sold 1,000 contracts at 31 cents and we bought back for 2 cents. We sold 75 at 48 cents. These are the only relevant facts, other than the fact that they expired here. We bought them back for 5 cents, right? So we had collected 31,000. We ended up collecting 29. We collected a small amount here at 3,600, and we ended up with 32.25. So that put money in our pockets. Now, we already had that money in some fairness, but we didn't lose it. And then what do we do on a Friday? We roll into a new position, right? Since no money came into the fund, we didn't do additional, right? We just went at the, when money came in earlier, we put these on the day before on 5:30, right? So now we went out and we took the 1,075 and we sold these. So we got 32,250. We had gotten 51,000. So we're building a little nest egg here, right? And that'll display here at the back, but we won't be paying in June. You can see where the real cash came in was when we sold shares. Each time we sold shares, right, went from 150 to 200, then we went from 200 to 225. So, 6 months from now, this will probably have 10 million. And this fund will probably have some $2 and $3 payouts. It'll be the Misty and Coney of YM funds, right, within 5 to 6 months. Hell, it could have a $2 payout come June. Let's see, right? Because I'm seeing the miners take off in mid to late June, have a fly up in July, and maybe half of August. We'll see. Okay. So where are we? We're at 1912, right? 35.30 on GDX. Let's go look at our weeklies, right? This is what they look like now, right? So we sold this new one at 36. Where are we, right? We're at 35.30. Not the best in my opinion, but honestly, this is a hated industry. Nobody's buying it. They're looking at NVIDIA. They're looking at all these FOMO stocks, right? And you almost can't blame them when you look at it. Bitcoin, I'm a big fan of, right? A lot of gold bugs don't like Bitcoin. A lot of Bitcoin people don't like gold. I see the utility value of both, right? Gold is not digital money. Gold is just stored wealth. Gold has always been a money equivalent, right? Especially when governments went off the gold standard. That's why they went off. They needed to print money and they needed to go crazy, Today, we don't really need the Fed. The Fed create most of our problems. And Bitcoin and gold are honest money. And Bitcoin has the advantage of a limited supply. And gold scarcity comes from the amount of wealth that it takes to dig it out of the ground and find it. It's just not massively. All the gold that's ever been mined would fill an Olympic-sized swimming pool, and that's it, right? So silver is the commodity that's going to really, really run. I'll show some charts later. But let's get into this. Okay, so these are our current mine. We're 9% behind on these guys. We see this week in and week out, so it's not really fair. So what happens is we went out and sold it at, 31 cents, and then it closed the day at 34. But as long as we stay below 36, which is a big ask, right? But again, these miners, GDX, go look at a daily chart. They opened up at 35.90, sold off all the way down to 35.10, and in that last few minutes of the market, when everybody came in and they bought all the indexes and all the big cap stocks, even the miners got a little bounce. So we got up to 35.30 on GDX. So the proof's in the pudding. We'll see what happens here. This guy, since we put it on the day before, we're capturing decent money, right? We've already, we sold it. Is this the right number? 14. Let me check that. Yeah, that's the right number. I'm just trying, I don't know, I lost my bearings on terms of what it's, okay, I get it. So we sold it for 5,130, we could buy it back for 4, hence the almost 16% gain. I mean, I knew it gained, but I just went brain dead on the math for a minute. This one we're behind a little bit, right? I think we sold it for 35, 34, whatever the amount. Well, no, it's 34 now. So what did we sell that one for? 31, I think. 30, okay. 32,250, and right now we'd have to pay 36. That's why it's behind. No big deal. We got a week to go. Okay. And also this fund doesn't pay, so it has a lot of time. Now we're behind on this, but that's to be expected. They went out and wrote a 38. So what happens is they can collect nice money, even though we didn't have any activity here. We did the day before. Since we're underneath the 38, we put money in the piggy bank when we sell a put. Okay. But where I see this thing is it will start making us a lot of money come later June and into July. So let's look. We looked at weeklies. So here we closed at 1912. Fair value is 1911. No new shares added. Price didn't change a lot really. What's our synthetic been? Well, it had lost 258. You know, these dates should be changed. I updated them to the latest, but I don't always do the dates. These are clearly the last 4 days. So this one is 29 and the other one's 28. I'll worry about the other one later. I don't want to take your time. So we've gone from being down 258, we moved up down 170, 259, and now we're 287 because we dropped a little more. The good news is we're collecting all of our weeklies, or we're collecting all of our weeklies. What does that look like from a perspective? This fund has had all of 10 trading days, right? This is when the inception was, but these are the days of trading. And I added them up, and it's 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 trading days, right? So you figure in a month, there's a minimum 20, sometimes 22 or 23. Right? And then declaration isn't. So this thing is going to do really well if we follow it out here. We've collected 40 cents and 80 cents. I mean, technically, if they were to pay, which I don't think they will, they could pay 80 cents right now on 9 trading days. They could pay this full amount and half of this. And they could shock people, but I don't think they will. I hope they don't. I mean, I've got some shares that I want, but I know what's happening in June. As I see it happen, even though my price will be higher, I'll buy more then, right? Because I'm going to get a lot of money in distributions this month again across my 3 accounts, and I've only bought GDXY in this account. I haven't even bought it in my other accounts, mainly because it wasn't paying yet, right? And I hate my money to be still. You know, it's something psychologically about getting the paycheck, right? Sure, I'll go in and buy a double bullish underlying fund in GDX if I think we're going to get capped and really, really run in GDX. And by the way, one like that is called Nugget. And then there are some for the junior miners, right? GDX tends to be the more senior miners, the mid-tier to high-end. And then there's some junior miners, and so there's a JNUG, right? That's equivalent to Nugget for the mid-tier, and I'll go over all of that when time is appropriate to help you guys. So hopefully you see the value add there. Okay, so let's go in. So now you've seen that. Those that don't care, you know, you can skip this. For people that understand, why does he keep talking about GDX? It has a low, you know, IV. What's the big deal? Nobody's interested in it. Nobody's buying it. Well, wait till these miners start reporting their earnings, right? Wait till the smart money knows this stuff. You know, the metals have been somewhat suppressed because gold is still viewed as an alternative currency. And governments don't really like you to be in alternative currencies, right? In general, even though it's really not a functional currency. Ultimately, Bitcoin's going to be a way better digital gold eventually. but they've had to stay away from that. It's a store of wealth, but that idea that it's a currency as well. Okay, so some of this stuff is silver oriented. But let me come in here and let me talk a little bit about silver, because remember, GDX has a lot of silver in it, just like it has gold. Almost all gold miners produce some silver. And there's almost no pure silver miners, because anybody that's mining silver is going to produce other valuable metals, including platinum typically, and gold for sure. So the issue with gold, there's not an industrial usage, right? I mean, gold is used in industry to some degree, in computer parts and, dental, and, gold's used, but silver is a fantastic metal. First off, did you know that it's used in electric cars? Did you know it's massively used in the most efficient solar panels? All the new tech and the efficient solar panels on a commercial basis all have silver in them, right? I think this is the first time ever, or one of them in history, that we've had 3 consecutive years of deficit in silver. Since silver is used as now it gets valued as a monetary instrument a lot of times, but its big use really is commercial, right? Industrial for silver. It's used in biotech, right? It's used in medical. It's used in solar. It's used in electric cars. I mean, it is the most efficient conductor of electricity that exists, right? You have it in your cell phone. Small bits of it. I showed a Tomahawk missile as 500 ounces, right? And what is a Tomahawk missile used for? Well, it's used for war, but it costs like $1.5 million, $2 million to make one of those. So every time you fire one, you figure not only do we have to make it, right? We had to pay a Lockheed or whoever even makes it, Northrop Grumman. I don't know who manufactures it, but one of the munitions companies and aerospace types. And then you got to drag it around, put it on a submarine, put it on something, right? And so there's tremendous amount of money spent. But the idea is it's silver consumption. Anything in technology and anything in, almost in munitions and those kinds of things. So here's what's happening additionally. So all you big fans of FOMO and tech and AI and NVIDIA, I love Palantir, by the way, and Palantir will be a YieldMax fund probably 3 months from now. It's been submitted along with 29, 30 others, and then once it's approved, it's up to YieldMax, and the approval is going to take another 2 months, 6 weeks, 8 or 9 weeks, and then YieldMax will decide when they want to deploy, right? So that's always up to YieldMax, but they got to get it by the SEC and get it approved first. So Microsoft, big deal, has announced that they will power a significant demand for energy for their AI data centers. So who are the biggest AI data centers in the world? Amazon, Google, Microsoft, right? Oracle. Microsoft has a whole division called Azure that does all of their stuff. Amazon is probably the biggest of all of them. Google is huge also. So these big giant companies have these giant AI data centers. They have, I know a bunch of them are back in the Duke Energy part in Virginia, and they just use massive amounts of energy, right? And we all know AI is the rage, and we all know the big tech companies, Facebook. That's been driving a lot of the purchases from NVIDIA. But what happened is recently Microsoft said they're going to use AMD's products and not NVIDIA's. But NVIDIA still has some advantages, NVIDIA, and their big GPU-like devices at the commercial level, data center types, which is what I worked in. I worked in the data center world for electronic storage and things in the late 90s up to 2009 before I retired. So anyway, I know a fair bit about it and cloud computing and all the rest, and these are just massive. So solar in no way will constitute maybe a large percentage, but just think of how much solar panel is going to take to even get some fractional energy. And they all want to be green, they all want to help things, right? And it's a cost effective when the sun shines, right? So use it. But what's that doing to silver supply? They're saying now that the latest 2024 estimate based on these orders coming in and everything says we could be 500 million ounces, right? So altogether, I see $50 silver and I see it fairly quick, right? That would only get us to the high price in 1980. Name me something else you know, right, that's at the same price it was in 1980, or right now it's barely over half. You won't find it much in metals, you won't find it in foods or coffee or things like that, right? Certainly an equivalent. Most of the things didn't exist. You could say, well, I have a PC and I didn't own one in 1980 because they didn't really exist, right? I think Compaq came out, I was carrying a suitcase type computer, compact computer, working for a company called Storage Technology that got bought by Sun Computer later. And we would go out and do analysis on a big data center about how much of their data should move from magnetic tape to spinning disk storage. Sorry to go off on that, but so I remember, and I wasn't smart enough then, being in my 20s, to go out and buy Compaq. I think it was even private initially, but that was a high flyer in the day, right? So you think back being in the tech industry, I look at all the booms and busts and things. I think Dell was my first stock I ever bought, right? Which was a massive win in itself. I didn't buy that much Microsoft early on, and I was using Excel like crazy. I mean, it just didn't translate the two. Now I know, right? I mean, wisdom in a lot of years of trading and buying and investing and seeing trends. So when I speak of the precious metals, I learned so much in that 2000 decade. Trading them, investing in them, putting option strategies together, to get 300,000 to 2 million in 8-9 years takes a massive effort. But I was motivated. I was motivated to get out of the day-to-day work every day and the stresses. Okay, so what's silver's historical greatest buy signals, right? That, again, if you guys just drop this off, but this is it starts out of the GDXY and it's like a massive education. So apologize, just you've already seen what you needed to see for GDXY. All right, so silver's historical greatest signal. Where are we, right? So this is the 1980 run up, right? Look at this. We're not even there. In 2009, right, actually 11, we went up and equaled the old high. And they don't stay there, right? Those are blow-off tops. What do you think a 1980 price equivalent with inflation would be? I can tell you, it's not $50. It's probably $125. I've read it somewhere, but I haven't seen it lately. So I think, and I'll show you a chart here, within 5 years we'll see $305 silver. Everybody's like, whoa. But I also think, gold will go, I mean, some people say 10,000. I'll give it conservatively 7,500 in gold. I mean, from 2,400, that's only a, 3.5, well, it's not even 0.5x. So maybe it goes to 10. I think we got a 3 or 4, a 3 easy and maybe a 5x in gold. But again, it just positions itself. What do you see in Bitcoin? And just BTC, is it a 10x, right? So it's 800 million. I see those numbers. They're not crazy, right? I mean, they sound crazy, and maybe it's 8 years or something, but the money that we have today, is anybody aware? I mean, if you're still here, are you guys seeing the defaults that are going on? I mean, the U.S. doesn't face that. We're still the world's reserve currency. It's being challenged by the BRICS. But fiat currency, if you look at it in 1913, which the legislation created the Fed, I mean, that money is worth like 2 cents on the dollar. I mean, 98% deflation, right? But that's been slow. You don't notice that kind of stuff. Well, first off, how many of us are 98 years old, right? So, and actually it's more than that. That 1913, then that would be 100 and what? 111? Yeah. From 1913 to where we are is 111 years. But, so I think a lot of us would like to level up. And maybe we will with quality of life. So we'll see. With tech and AI and everything else, you know, trying to find the answers to diseases and all the other things, gene alteration. So where will this go? This will go very high. I mean, I don't think there's any way we escape 2024 without $50 silver. And if we run up by it a lot to 70 or 80, we could pull back and test 40 or something. So don't think these things don't run. And you know, look at this. This was, I remember this all well. I mean, I was buying silver. I was in the futures market. You know, this almost scared me out of silver. You know, I remember this 2007, you know, run up. I was like, oh my gosh, I remember at 20, I doubled my position in the futures. I was controlling a ton of stuff, you know. My little 50,000 of that 300,000 I stuck in the futures. And, you know, I ran that from 50,000 to 500,000. That made 10x. But you talk about days where I couldn't sleep at night. That's one of the reasons, you know, I sold out most of everything in 2009 because, you know, when you're working a job, yeah, I made great money in my job. You know, what's, you know, 300,000, I mean, it was over 30,000 a month that I was making in income. But I would have trading days where my account, when you get up to $1 million, $1.1 million, $1 million, $2 million, and you're actively managing and working it and working, I mean, I would have swings of 250. I would have what I made in a year in a day. Oh, I'm up to 275,000 today. Yay, right? I'm up 14, 15%. But also, I'd wake up and I'm down 100 grand. And I go, oh man, I got to make sure I'm on that conference call today. I really need this job, you know? So I won't ever go back to that level. That's in a way why I love YieldMax, but I like hedging. I learned a lot in that decade about hedging. So next time you're listening to a 30-year-old tell you about YieldMax and which funds and everything, just ask yourself, is this person battle tested? Do they know what they're doing? Do they have experience? Have they been in bull markets? Have they been in bear markets? Do they understand derivatives? Do they understand currencies? Do they understand futures? Because we are evolving. This decade that we're in the 2020s, will look, nothing is identical. It rhymes more with the 70s and it rhymes more with the 2000s. Well, we all know what the 70s was, right? We went off the gold standard with Nixon, 71, 72. And so, you know, gold had been priced at $35 at a fixed price. So in that decade, you know, gold went from, if you want to say $35 to $875 of January of 1979. Now, in some fairness, you know, I was already in college in the latter 70s in that decade, but I was not doing anything in gold and silver, you know, and then I was out of school and I was in working for Computer Sciences Corporation, anybody that knows them, and they were a big worldwide network at the time. And I remember my boss telling me, Bruce, you know, this 40-year-old woman who was really smart, and I looked up to her, you know, and I was in my early 20s, and she said, did you see silver? And I'm like, no. She goes, it's, you know, this and that. And you know, because it ran. That was the Hunt brothers trying to do all that stuff. And she says, well, I'm going in and I'm melting down, you know, my mom's heirlooms and all this silver. And I was like, oh, okay. I mean, I was kind of clueless. I was also with the Shah of Iran earlier, and I remember the long lines of gasoline. So some of you that are older like I am, you remember that stuff, right? And you don't really forget it. So if somebody tells you, oh, well, this could happen, whereas somebody real young that's never experienced that kind of stuff, how are they going to react? Do they even understand what's going on? So that's all. I mean, do what you want to do, but I'm trying to tell you that I'm going to bring you value. I'm going to help you through this. I've discovered these Geomax funds. That kind of stuff didn't exist, right? I mean, there's Defiance, and I'll look at some other stuff. But in general, if you manage these correctly, this is income that really wasn't available to people, right? I mean, even I mentioned before how I got hurt a little bit in the Canadian oil sands because in 2009, 2008, I'm like, I got this 2 million and I want to exit soon from work. What do I want to be positioned in? I don't want to be at night making and losing $150,000 or $200,000. That's for sure. That's not my idea of retirement. But honestly, other than some REITs, and I wasn't sure about real estate. We had that, that whole crash in the 2008 and 9 and everybody, the great short and all of the, the mortgage scandals. And I was like, I didn't trust real estate at all then. I actually sold my house and went to cash. Now, that wasn't the smartest thing in addition to, having my other 2 million. Wasn't any of that come from real estate. And in hindsight, I still was staying in the States for a while, so probably shouldn't have sold. But the point was I didn't trust a REIT, right, to give me 9, 8, 10. It was hard to find trustworthy. I was getting 14% in the Canadian oil sands, and I was thinking, well, they're not going to go down. I'm looking at these charts for all these years. Well, all it took was Stephen Harper, the Prime Minister, to put some legislation in and say they've been paying out all their dividends to avoid taxes, and he changed the whole game for them. So those stocks, because the Americans were all buying them, so were Canadians, but it was the American money because of the size of our markets that bought them up. So I got a comeuppance, right? So I took a hit or capital loss, and I lost my ability to make that 14% because, and think of this, guys. Here's another thing to think about. We've got the yield maxes, we've got some of this stuff. The only thing we don't want to happen is have a 30 or 40 or 50% decline in the markets where there's just mass margin calls, right? So it doesn't matter what sector, even gold and silver stocks will get hit. It's just that they'll recover much quicker because their earnings are still there, right? If you lose it in some other big tech stock that nobody's buying anything, right? But like I said, silver is just needed. The hospitals need it, solar panels need it. You talk about electricity. If the lights go out, people care. People can starve, people can die, if you're on a dialysis machine. So, power is critical. And I learned a lot about the energy market as well because I didn't know it near as well as I knew precious metals. And I've been doing a lot of energy before I found Neomax. I was in Petrobras in Brazil. I probably made 40% over the last 3 years in the underlying, and I was getting 17 and as much as 40% yield in the 2022 year because they were also selling off assets and they were distributing it all out as dividend. At one point, I had a 50% annual dividend. It didn't last. I've sold all my PBR and PBRA, which I think was brilliant to get 16, 17%. Everybody said, oh, the government's unstable. Not really. I mean, it's a state controlled, it's third world country. I'm not so sure our government isn't third world in the behavior that I see on both sides of the aisles at times. But anyway, without going there, energy is important. It's important. So I see silver and gold, and I see the precious metal miners. Well, why them versus the underlying? Well, let's look at something in regard to that, right? I don't know why. Okay. So there's your supply. Here's a chart on silver. You know, this is before 2025. I think we go right to 50. And probably, I got another chart in here. This is the rate of change. Where's my other chart? Oh, wow. I had it in here. Must have gotten overlaid. Okay, let's go look at this one. This is something else I wanted to talk about. So, for those of you that are just new to GDX, what is GDX? Well, GDX is a long time ETF that has mid-size and larger mining companies. They're not explorers. They're not the little guys that are going to hit the home run or go bankrupt, right? They're not somebody that bought moose pasture somewhere in Saskatchewan and said, hey, you know, big gold resources, and, you know, goes public, and all they are there is to milk the money, right? They don't have any gold. Hell, they don't even have mining equipment. And that kind of stuff happens, right? BREX and some of the other things. But so GDX is a big basket of legitimate producers, both medium size and large size. You generally can trust that. So the HUI is another index, right? So I could show you a ton of charts, and let's go. So here's what I did for you. So I said, okay, because I'm showing you an HUI, and you're like, what the heck is that? I can't buy a Yomax on it. All right. So here's HUI overlaid with GDX, right? So I did an HUI, it's the black one, and as you see, GDX, okay, which is what GDXY is based on, is in yellow. So look at these guys. So let's look at the year down here on the bottom, because that's what you care about, right? So it starts in 2010 and runs into 24. Well, as expected, the peak when gold was at $1,911 in 2011, I think it was August, okay? It could have been April, but 2011. You don't have the number, but essentially GDX was around 65, okay? Hold me within $1 or $2 of that, okay? Well, GDX 35 now, right? So, oh, well, wait till gold gets to 1911. We'll be right up there. Duh, we didn't. So there is no love for the miners, right? Just absolutely no love. Well, what happens when you have a restaurant and nobody wants to go to it? They probably should shut the doors, but maybe there's a couple locals and they go in there. Well, what happens when that comes really popular and it's the rage and everybody wants to go? Well, good luck getting a table. Good luck getting in. Well, what happens to the miners? Everybody rushes in, right? There's not enough seats, right? So the line gets long. People start telling you, you know. And so it's literally a gold rush into the gold and silver miners and the precious miners. But the gold rush typically comes out of earnings, right? Institutions don't want to own it until they see. Well, if you've been looking and saying, well, at 1911 gold, they valued the miners at this, we're at 2024. Well, because we're still in a bull market in FOMO, right? And in the NASDAQ, and that's coming to an end. And I'm not predicting a crash. I don't want to lose subscribers. You know, you're probably not even here if you're my traditional subscriber. You might be. But what I wanted you to know is that my prediction on the Dow going out 7 years from now is probably a 1x, right? So the Dow probably doubles from here. We're at 40. Maybe we only go to 65. Maybe we get to 80. But that's over 7 years, 8 years. I think we'll have a 5x to an 8x in a GDX or something, right? So it starts to say, what is in favor? Do I say go out and sell all your stocks? No, because guess what? That's what the Dow probably does. What does the S&P do, right? The Dow is slower to do it. The S&P will start putting Newmont and a nickel and these bigger guys in their S&P 500. They'll be slow. They probably won't do it for 2 or 3 years. So maybe the S&P outperforms. but generally a lot of their sectors won't do well, right? And I'm sure in tech there's going to be a few high flyers, but just the NASDAQ and the triple Qs, I don't see it. I don't see a 2x, 3x, 4x, 5x, 6x that you're going to get in precious metals and in this sector of hard assets and commodities, right? You're not going to get that, again, because there's always a balance. There's an equilibrium. Go back and look at how much they've run up, right? Look at the NASDAQ. Did you ever go out and look at the 5,000 in the NASDAQ, right? That the dot-com bubble took it to 5,000. I remember being in a trading room and watching it in 2000, working for a big tech company. My stock was just making me a ton of money with the options and everything I had in my position. I was earning a lot of money, and I saw a guy in there, very bright trading guy in New York. Anybody remember? Michael Parnas, Waxy was his name. And he was saying, hey, this is all going to crash. But we had all ridden everything up with him, and he said, hey, this is going to go to 1,500. Even I stopped going to his room anymore. I didn't want to hear it, because if the NASDAQ was going to 1,500, my stock was going to get, cut in a fourth. And the big guy, the guys that had really run up 6 and 8 times in that last 5 years, they were going to get really, and it's exactly what happened. Exactly what happened. And I'll never forget that, right? And I said, I'll never not be hedged or be prepared again. And I had some in my gold when I took the 300,000 and went to, 2 million, but not even enough then. Right? Because when you have massive gains, you need to hedge more, right? When you have small gains and you're just starting, then it's not as necessary, right? But when you got massive gains, you really need to hedge on that. Okay, so what I'm trying to say is these are set to massively outperform. And then you say, well, why is gold going up? What's it really used for? Again, gold doesn't have it. It's fear. Gold represents distrust of government. And we're at the end of government in the way we've known it, where it's respectable. And I'm not talking about a particular administration, right? I tend to be more libertarian in my views. I have a preference for candidates. But honestly, the system is so broke that we see it every day in the news. We see everything that's going on. The divisiveness is the classic end of empire. I mean, you and I, these things don't just disappear. Look at the Roman Empire and look at history and look at the time involved. But they do have cycles. And we're running that cycle through the first world countries, and it's shifting from the west to the east, right? And it's done it for thousands of years. So, but you have to be smart about what you're doing. Look at also right now in China and in Shanghai, they have a gold and silver exchange. The Chinese, because they're restricted by their government, it's still communist, right? So they're told they can't do this, they can't do that. The real estate was a bust. Gold, they are allowed to buy gold in their country, right? They can't bring gold outside. So that Shanghai exchange has a premium to US gold at like way bigger. Even on silver, there's a $10 premium. So if silver's trading at 32, 31, I think it was 30 and a half on Friday in the US in the futures market, theirs is 41. Why? Because it's controlled by the big banks. We've got the banksters pulling stunts, right? Because the banks are operating in collusion with the government to keep the currency afloat, and they don't care as much about the metals. But the problem with silver is they can't ultimately control it. You can do so much in paper, but J.P. Morgan is a custodian of these kinds of things, and governments do what they have to do. But if you want to protect yourself and your family, you need to take custody of precious metals. You can trade SLV and GLD, these big ETFs that supposedly are holding all these metals. But I would buy the miners right now. The miners are just a fantastic ticket. I own a ton of physical gold, right? Because in 2009, I took about half of my profits and went into physical gold. So I've sold some of that off recently, just to put it to work in these 100% yield returns. So, I mean, it's a fantastic, all right, I'm really long in the tooth on this to you guys, but hopefully anybody that listens to this rant understands it. So these channels exist for reasons, right? So this is very likely, this is an HUI saying we're so underbought. So the HUI trades around 275. This chart's a few days old at 281. But whereas GDX is 35, right? But they're almost identical in their movements, right? So forget about its price, but saying a 1,250% move, that's a 12x, right? And that's probably doable, right? And the goal, why? Because the miners, remember what I showed you GDX. Let's take GDX for a second. So GDX is at 35. When gold was at 1911, which was a big run up in gold, all-time high in 2011, right? 1911. So GDX was valued, the miners, at $65. So now gold's at 2,400. 2,300, who's, you know, $50 here or there, and they're valued at, it's valued at 35. Why? Because the analyst, it's so far out of favor, nobody cares. They'll put a buy rating on, nobody pays any attention. You're going to have to see the Newmonts and the Barricks and the Anikos and some of the big mining companies come in. And they're doing it this quarter. They've been ramping like crazy, right? And some of them even delayed Q1. So your Q2 will be the first. Your Q3 at the end of September and October. But I think they've already run by that time. I think what will happen is the June results posted in July and early July will not only show massive earnings, they'll give guidance that they're upping their earnings for Q3. We could have, though, by September, October, that's like crash time. That's time where the markets can easily take a 10 or 15% flash crash or something, you know. And so I'm not as optimistic about the miners. If they don't run at all for some reason in July and August, then we'll run then. But I think we're going to run in tail end of June and run in July and maybe even to mid-August, and then we'll sell off if the markets sell off. But the miners, final point, the miners perform 3x to 4x easily to the metals once the run starts in the miners. So a 12x is really just saying a 4-time average, which is normal, over a metal that goes up 3 times, right? So silver would only have to be 93, and silver easily will get to 150. Gold will easily get to 7,000, right? So there's your 3x's, 93 and 7,000, in order to produce 12 times your miners. So we've got 5, 6, 7 years, right? Now, this isn't without, you know, a move up here, a dip to here, a move to here, a dip to here. It could be a 6-month painful time. So if we get a big run up and I come in and tell you to buy dust, you know, maybe you want to hang in for capital gains and keep your GDXY and use some money from your dividends and just buy dust, right? Dust is a 2x negative on GDX, right? There's some for HUI. So you can make money on the downside from your stock to offset any NAV reduction, but you're also going to be paid by GDXY. And who knows, maybe by then they'll have a negative GDX that pays income, right? So anyway, that's my education. I'm super long in the tooth, and I may break this out as a separate video on why metals, why precious metals, right? And it just is on the tail end of GDXY. Okay, guys, see you. Have a great weekend. Bye.